Hello everyone and welcome to another video on the channel. In today's video, we are going to be talking about swing trading and using supply and demand. Okay. Um, Usually we are mostly doing our videos about the 4 hour time frame, okay, which isn't really swinging for us. Okay, for some people that are used to like very small time frames, maybe the 4 hour swing, but swing for us is definitely not the 4 hour time frame. Okay, for swing we use the weekly time frame, and those are literally the trades that can take 1 week, 2 week, 3 weeks, sometimes even more to play out. Okay, and for us this is swinging. Okay, this is where you enter a position and you just let it run for to the next target, and this might take a couple weeks, might take 1 2 2 3 weeks, whatever. Okay, we just let it run to the next target. um, Whereas the 4 hour time frame, we I mean, our average trade, I would say, is between 24 and 48 hours. Sometimes it actually does go faster when there are, for example, some news events and stuff at the same time. Sometimes they push the trade a little bit faster, um, but in the end, all what counts is price. So usually it takes us a little more than a day to hold, to 1 to 2 days. So this is basically intraday stuff for us, and we've seen scenarios where it literally took 3 candles. Okay, so that's basically 12 hours. It really depends. So um, what I wanted to talk about, so in this video, is swing trading and using supply and demand for it. So as you can see, we are again on GBJPY, which is our pair that we trade, and you can see that we are right now in this sell zone. Okay, so we came into this weekly sell zone some time ago. As you can see right here, we went into it. Okay, for a long time I've been very bullish. We came into this weekly zone, and then basically we saw a nice reaction. So usually when this happens on a weekly time frame, we look at the smaller time frame, which is a 4 hour, for example, to look for entries. um, where the first reaction would be this one over here. Okay, so this would be the first time it entered the weekly zone. And as you can see, we had some ranging going on as price came in this weekly zone. Obviously, it's going to show some sort of reaction. And then basically, we had a very strong liquidity spike on the 4 hour. And then, lots of opportunities to sell right now. So, any small sells on basically is definitely valid. It's not even a sell, it's just a sell reaction is valid on this time frame. So there's another one over here, and there's just so many reactions, as you can see, on the sell side. So literally there's 1 2 3 trades already in the sell zone that you could have taken. um, there's probably some more over here, this one as well, actually a bit lower, this one over here. So those are trades that you can take, and we're talking about a lot amount of pips. Okay, so from the top, we're talking about 700 pips, and then from the next area we'll be talking about 600 pips. From the next area we'll be talking about 500 pips. So all in all, around 2000 pips probably you could have caught with some nice tight entries using these 4 hour small zones. And basically where you can let this run to. Okay, since we were in this weekly, you could say, okay, I'm gonna just let it run to this weekly low. Okay, or I'm gonna use my volume range and see where the point of control is, and you set everything to this area over here. Okay, so this would be a nice target you could have done. And definitely that's a lot of pips. Okay, that's 600 pips. On each position is quite a lot of pips, 500, and then 400 over here. So talking about 1,700, 800 pips. And that's obviously if you just use one position. If you have more positions, then obviously it's gonna double or triple the amount of pips. So we're talking about 2 3 thousand amount of pips, which is really good with entries that are mostly between 10 and 20 pips, which is our usual stop loss, depending on the candle and stuff that we enter with. But yeah, guys, we like to keep things very simple. We had a weekly sell zone, price came in, so we looked on the 4 hour time frame. We saw some nice entry confirmations, and then we just sold, and we held to the next weekly target, which would be this one, and we made a lot of profit on that. Now, on the buy side, okay, there's some more zone. So this would be a weekly zone. We wouldn't really take this zone as it would be too big, so we use these candles to make it a bit you know smaller, the zone, because if not it would be too big. And this is not a major zone, okay, but it did break structure. Did break structure over here. Well, you can see it over here that it broke structure. And you have to keep in mind that the weekly time frame is really strong. So what did we see? We saw a reaction. Let me just go down the 4 hour. Okay, so the first reaction, this basically is where the zone got created. Okay, the weekly. And we saw a first reaction. Let me see when exactly that was to keep things correct. So we saw 19th of July. Let us go back to 19th of July, which would be this one over here. Okay, so we saw a first reaction over here. Okay, here the sell zone got created. Okay, so saw some strong buying happening, came back again, and then up again. But then the actual weekly first retest of the zone would be this one. And as you can see, basically, it went very deep. Okay, and where did it go to? It went to this area over here. So if you use your volume tool again, because it's very rangy, you can see that there's some volume. Let me just zoom in on that. There we go. So you can see that this is a very big volume range. So what I would usually do is I would take the whole range since we're in this weekly, um, and I would just look at this right here, and you can clearly see that this again is a liquidity spike on the 4 hour. You can see all these lows basically. Okay, we have 1, 2, 3, 4 lows. Okay, a nice basically volume area over here. You can see this liquidity spike. So literally you could have said, okay, I'm going to enter at the close here, or I'm actually going to look at a smaller time frame to even refine my entry and have maybe 10, 15 pips stop loss, which definitely would have been a valid entry and stop loss and all that. So when we bought over here, we must realize that we're coming from a very strong sell zone and we're not in a very strong buy zone. So our target shouldn't be that far. Maybe you can use a daily target. Okay, if we it's not appearing. There we go. So we were in this buy zone over here, 19th of July. Okay, more or less this area. It was this area over here, this spike. So maybe you target the next area, which would be the daily one over here. Okay, but we're still talking because we really catch from the bottom. We really catch 450 pips, which is crazy. Okay, so and if you look how long this took you, so you basically entered around the 20th of July, and you got out with this wick over here. You got out. There we go. So it took you 9 days. Okay, that's 1 week and 2 days. So that's a little over a week that it took for this trade to play out, basically. But this is a huge trade. Okay, this is massive. Okay, with a nice 10, 15, 20 stop loss, and you're catching 450 pips. It's a very big risk to reward, and that's obviously only with one entry. There are definitely some opportunities to add some more entries along the way over here. So yeah, this would be an example of a nice swing trade. And as you can see, these weekly zones are really strong as well. They're obviously a lot stronger than the 4 hour. So we came back from second time and we reacted again with a pretty strong reaction again of maybe 300 pips. And then we came back again for a third time and we have even a stronger reaction. We had over 700 pips. Okay. Obviously, it's very hard to predict these areas, these moves basically, but um, these are all levels that you can trade. Okay, even a second, third time, you can definitely trade in a weekly. Okay, because a weekly is really strong. Okay, it's not like a 4 hour. Okay, so basically, this would be some examples of swing trading. Okay, just look for the same sell and buy zones. Just understand which ones are stronger than the others, and just keep in mind, to have reasonable targets. Okay, don't go too crazy. Don't be too greedy. If you can catch a trade from here to the next over here, which takes definitely some time, you already did a very great job. And if you can maybe catch the opposite than the trend, then you can basically also make a lot of money just holding for 1 week maybe, instead of like 3, 4, or 5 weeks even. There were more opportunities on top over here to catch, and if you're still holding, you're already like 4 or 5 weeks in. So guys, this is basically the simplest way of swing trading. This very healthy way of trading. Okay, not a lot of thinking, not a lot of charts, not a lot of hours. It's just very clean. and it keeps things, very healthy for you and your lifestyle. Okay, and there's a lot of money to be made on these swing trades. You just need to have the proper patience and the knowledge to trade this. Okay, so guys, hope you liked this video. If you did, would appreciate the like. If you have any questions, just let us know in the comments down below or send us an Instagram message so we can help you out. And yeah, if you are new to the channel, would always appreciate as well if you subscribe. We're uploading new videos every single week. We usually try around 3 educational videos every single week. So yeah, guys, and if you want more info or in-depth training, then check out the link in our description and you can find some more information about our website and all that stuff. So guys, hope you liked it and we'll see you in the next one.